All right, what's going on, everybody? Please let me know that this thing is on right now. Drop a comment and let me know that you can hear me, please. Yeah, sorry for the delayed entry there. It took a little bit of time for me to get all set up here, but we are ready to go. So heading into March, right? Another monthly candle down. So I thought something that I could do tonight, which would be cool, would be for us to get into some higher time frame analysis on something like the monthly time frame. So we're going to take a look at the monthly time frame, and for me particularly, I to me, higher time frame analysis trumps all, right? So if we can get a general idea of what the draw on liquidity is on a higher time frame, typically that leads to a higher probability on trading on those smaller time frames. But those are all things that we're going to get into. So if you're watching on YouTube, please drop a like, subscribe to the channel. If you're on Twitter right now, please drop a like on this video and share it if you like hearing me do these types of things. It's been about 2 weeks since I did one of these. For the public, but usually one a week, maybe two. But for now, we'll see where we're at. But let's get into it. Let me come on over here and share my screen 1 second. Okay. And also, of course, we are doing charts. So if you have any in mind that you'd like to look at on a higher time frame, feel free to drop it in the chat. We will get to it eventually. Sometimes they get backed up, and I apologize for that, but it takes some time, some of these. So all right, so let's share up. We're good. All right, let me just make sure we are all good. All right, good. So everybody should be able to see my screen now. And now, one comment that I made before was that to me, higher time frame trumps all. And the reason why I look at the higher time frame is to identify what our draw on liquidity is. So where is price likely to go? Okay. So if you've come to the understanding by now from listening to all the stuff that I've been doing on here, if you believe and understand that the market has one job, and that job is to gather liquidity in order to move price, right? Without any sort of liquidity, aka look at like a penny stock, right? Without liquidity, price is probably just not going to move, right? So with that in mind, having an idea of what our draw on liquidity is, and it's something as simple as a swing high or swing low, which of course is much easier to find when you have a specific trend or range that has already been identified. For example, NASDAQ, our draw on liquidity was our swing high here. So by having that, having that check out on, whether it's a monthly chart, a weekly chart, daily chart, that's the kind of the way I like to work my way down onto something. And that way, if I have a pretty good feel that price is going to move higher, when you get down into a smaller time frame, typically, it takes a lot of the stress out of it, having an understanding of where you think price is likely to go. And it takes a lot of the thinking out of it, I guess you could say. So first and foremost, as always, we'll start with NASDAQ and we'll move through some of these names. I have a bunch of names that we can look at, but also for anyone that you guys have, feel free to just drop it in the sidebar. But first and foremost, of course, with NASDAQ, you might notice that we have nothing to our upside, right? We currently are above our previous all-time high, which was all the way back in November of 2021. So I do not have additional information to my left in terms of what our draw on liquidity is. Where is buy side liquidity here? Beats me. We got nothing, right? So with that in mind, right, that doesn't necessarily mean, oh, we have to tank now. Absolutely does not have to happen, right? But it makes it a little bit more difficult when you don't have something to work off of, right? I've been saying it for a while, but typically at all-time highs, I'm kind of useless, right? So ultimately, I think the winning game plan in this scenario here for bulls for a continuation type move throughout the rest of the year, really at this point, is, and I'm not saying that if this doesn't happen that it's not a possibility. What I'm saying is, what is the highest probability in my eyes that we do get some sort of continuation throughout the rest of the year? And to me, I would love for price to maintain itself above this high from January. So that high of January is 17,806. I know it's not all that much wiggle room, but it would make me feel real good about a continuation type move if we were to create a monthly imbalance, right? So if we create that monthly imbalance here, at that point, who knows? Maybe April, you get that retracement into the imbalance. And from that point, we could see that next leg higher. If it doesn't happen, again, that doesn't necessarily mean that it's impossible for a continuation type move. It's just one where I would say, okay, maybe we finally do get the weekly retracement down into this area here, which is our monthly volume imbalance or gap higher. What does a gap higher show you? It shows you urgency to move in the direction of the gap, right? So if you're seeing a gap higher, you would expect urgency to move in the upwards direction. If you're to gap down, you can expect for some urgency to move lower. Okay. So as you could see here, I have these fibs on, right? And I've been getting this a lot. I do not trade off of fibs. I don't. It's just a way for me to map my range. I don't really care which one in particular that it is, right? It's just the overall idea of what a range is and how can we, operate while using a range, right? So what I mean by that is let's say our range is set from this point here, 8255, which was a long, long time ago, to our high that we had in 2021, right? This retracement here, all that is to me is a bullish retracement. That's it. And, at what point do I say, okay, currently at fair price, or what is equilibrium of this range? What is the midpoint of the range? And at this point, I can identify and say to myself, okay, well, 12,977, that is the equilibrium or the fair price or 50% of our current range. Okay. As we know, for anybody who's been following any of the stuff that I've done over the last 4 years, you know that price often likes to retrace down into discount of a specific range, right? So what that means is rather than, people who have money to move markets, they're not buying longs up here, right? They're getting these longs down in discount of a range, right? So if let's say fair price here is 12,977, right? Anything below there, we can anticipate being a discount, right? You're getting money off of what our current fair value of something is. If you're buying longs above 50%, technically you are overpaying for it, right? If your fair value is here and you're willing to pay money up here for it, you're overpaying in a sense, right? And this goes for the monthly time frame, weekly, daily, hourly, you name it, all time frames are going to play. So by looking at it from this perspective, we know, was it a bear market or was it just a discount retracement? This is a question I've been poking at people in the group because I just think it's ironic how this all works. And again, any time frame, any ticker, and you're going to notice that this is a very recurring theme that occurs quite often. But anyways, we get our discount retracement, we run for our highs. So my model is complete here. So for anybody who's watched anything on my model, whether it's on YouTube, whether you're checking out my tweets or something like that, you'll know that after the completion of my model, one of two things are going to happen. And get ready, your mind's going to be blown. So the first thing that can happen is we go up. Oh my gosh. The second thing that can happen, we go down. Wow, mind blowing, right? But if we're to sweep this high, so when I say sweep, I mean by take out, price takes out that high, gets above it, one of two things are going to happen. We're either going to see that imbalance created. And if we see that imbalance created, that would offer us, an opportunity to look for that continuation or that breakout type trade, right? On the flip side of that, if you get a liquidity sweep, and I'll show you one right off the bat here. Hold on. If you complete my model, and here were the previous fibs that I had on, or the range measurement. So there's your low to your high. There's your discount retracement. There's your run for highs. Look what happened when we took out that high, right? We took liquidity and fell, right? We died. Price fell off a cliff. So that is the second possibility in this situation, right? So that's why, going back to what I was saying just a little while ago, for bulls, to me the biggest pull for them would be to leave this open. I know it's not all that big of a range, but that would, to me, ensure that we are going to get some sort of breakout trade. That doesn't necessarily mean that we're not going to come back down into this area, and it would look something like this at this current moment. Again, this could absolutely change. The candle just opened, but there it is, right? And let me make it green so everybody can see. So if it were to, let's just say it's the last day of March right now, right? And this is how we close. This is a bullish imbalance. I would look towards this as retracement and expansion from that point. If we aren't, if we, let's say price comes on down here, we don't create that imbalance, then it's a little bit murky, okay? If we were to create a candle next month that takes out this volume imbalance or gap higher, that's a bearish order block. And from that point, I would anticipate a retracement into discount of our most recent range, which would be this low to our high that took out our previous high, right? So it's as simple as that, really. And that's how I'm kind of viewing the entirety of the market. Now, I didn't really do all of that much previous work on the monthly. I wanted to see how everything shook out. There were a few charts that actually didn't look all that bad going into next month. A lot of the big tech names are, to me, a little bit more of a dice roll, and something that obviously we're going to have to wait a little bit and see how it all shakes out. But we'll go through them now. I just want to make sure that everybody in the chat is all good. I see a bunch. Perfect. Okay. So beautiful. All right, cool. So again, any tickers that you guys have, throw them up and we'll get into them. But first, let's just read this through. AA, sure. PFE, sure. CVNA, yep. You're welcome, Kurt. Let's see. Pfizer again. Okay. Wow, everybody wants Pfizer. Sheesh. Okay. Roku, Shop, Apple, whoops. Is this being uploaded? Yep, it's a live stream. Yep, you can get it on YouTube after. Why did you pick the bottom of the range where you did instead of the candle to the left? I go from green candle, so the real start of the price run. Congress just passed a bill to kick the can down the road bill. Yeah, that's kind of what's been happening for a couple years now. You're a believe. Can a candle be its own retracement, if that makes sense? Yes. If you were to go down and use that range on a smaller time frame, you could, view it as that. I'm struggling with the discount range. Okay, we'll get to that in a second. Did you SPY? No, we didn't do anything yet, just NASDAQ, but SPY is very similar, so we'll run through that one. That pink scroll bar, oh, sorry, I'll change the color of that. Don't worry. ALB. Okay, hold on. Let me just change the color of this. Whoops. Green any better? All right, so let's go through a bunch of these names. We'll start off with the question. I'm struggling with the discount range. That I'm kind of curious what you mean by that there, Warzel. Because, ultimately, if you have a bullish trend, below 50% is going to be your discount, and vice versa. If you have a bearish range, above that 50% is going to be your discount, right? Think of it this way. What's a discount for your calls? Below average price or, fair price, right? Anything below here, you're going to be in discount, right? And we have multiple bullish imbalances. And that's the thing. I'm not buying it off of air. It needs to have an imbalance here to meet the criteria. If there are no imbalances here, I do not expect a bounce. I'm not trading using fibs. It has to have an imbalance to go with it. Without that, to me, it's fib trading, and I'm not really a big fan. Let's come over here. Hold on. I'm just waiting on you there, Warzel. When you trade intraday, are you looking at the 30-minute chart? I really do go through a bunch of different time frames throughout the day. To me, I think that's a kind of a skill that once you get to that point, you can really, start to see how things are shaping up. We actually saw it today when we were trading live, the hourly breaker on SPY. And we weren't really, I guess I wasn't personally really seeing it on NASDAQ. It was there. It was just not as, pronounced as it was on ES. And I'll show you guys right here. So here it was on NASDAQ. So, this was this is what I really wanted. Didn't get it. But this was that retracement down into discount for that move higher. If we are to go chase these all-time highs, say tomorrow, all that's telling me is that the range isn't currently set, and we can wait for it to set. On the flip side of that, here's your bullish breaker right here. There's NASDAQ's wick into it, and then there's its expansion. Now, if you're to look at ES, look how beautiful this is. There's your bullish breaker. Low, high, lower, low, break up through, retracement down, hold, gonzo. So, I think you really need to be aware of multiple time frames for setups. I don't think you could just look at one because, to me, really the reason why I was reluctant to long early was due to my idea that on the hourly we never got down into discount. It doesn't necessarily have to do that, but that again, that's just my model. So I would prefer to do that for me to feel the best. And we didn't get it until later on in the day, where I think it was more of a giveaway that when we got that retracement towards 3 o'clock, that was a uh, kind of, I don't want to say a layup, but it was a pretty easy find. And really, the my risk reward on the trade I ended up taking was like $250 to make like 2,300. So and it happened pretty fast with that power hour. So okay, so let's get into some of these charts. Sorry, I'm going off on a thing there. Oh, I know who Flickr is. What's good, man? Double A. All right, let's roll. Ready? So a lot of these I might not have charted on this. I did just create a new layout here on TradingView. So all right, let's look. So we know that this high is taken out, but first, before anything else, let's just look. Huh. Okay. Right off the bat, I'm seeing this. Okay, so while we did have a bearish range for a while, you have this high here, and you also have this high here, right? Notice that in between these highs, we don't have anything pronounced on the monthly time frame. That doesn't mean on the weekly we might not have something there. That doesn't mean on the daily we might not have some sort of imbalance within this range. I'm sure we do if we're going to reject here. But with that being said, hold on, let's just check one more thing. Actually, hold on. That's pretty interesting. CE, or 50% of the wick rejection right there. But we also left this high here, right? So all of those highs, to me, on a monthly time frame, I would consider those really relatively equal. It's really not all that much of a difference in terms of money. So with that, we just know that with the sweep of this high here, not only do we see that market structure shift, which is great. So from this point, what was the price run that took out that high right there? And to me, I'm looking at something like this. Green candle, set the range. You'll notice that, did we reach 50% there? Yep, we did. So by us reaching 50% in that, I move my longs here, move it on up. Okay. And you'll notice, so to me, this is a bearish market structure shift. Okay. So with that, I know we have this imbalance right here that we're holding on to with for dear life, I guess you could say. And then we have this bullish volume imbalance right here. So again, while I'm not necessarily all that bullish on this, that doesn't necessarily mean that there can't be some sort of bounce as a result of creating whatever the range might be. So with that being said, let's just map out some of these imbalances here on the monthly. So you have right here, this would be a bearish fair value gap, a form of our imbalances that we talk about. Here's another. Here's a gap down. Again, gap down showing you urgency to move lower. Again, gap down showing you urgency to move lower. Same thing here. Gap down showing you urgency to move lower. Okay, so it happens quite a bit. You'll notice that although, oh, hold on, this is a bearish fair value gap right here as well. But although, the wicks are going to do the damage, they're going to give you that heart attack, especially when you're in a position. But ultimately, you really can't void the trade until you get some sort of confirmation, meaning you get a close or a disconnect from a specific level. That's why, to me, like taking a trade off the monthly is much too difficult, in my opinion. But can it help you identify what your drawn liquidity is? Absolutely. And that's why I like looking at the higher time frame. To trade off of something like this, think about it. At one point, let's say you even took the short here at 52. At one point, you're $6, $5 under the water, and really the trade isn't dead at that point. And that's the difficult part. And that's why when you're trading off of a monthly time frame, to me, you really have to have a far out idea in terms of where you think price is going to go. And it'll kind of come down as you go down in time frame. So meaning, maybe your monthly, maybe you're with a monthly, you really should be looking far out in terms of leaps, right? And then if you're looking at a weekly chart, maybe you go, a month or two, somewhere in that vicinity. Then you move it down to a daily. From the daily, then you can maybe a couple weeks out, something like that. And then really, if you're you're kind of getting into the hourly, depending on what kind of contract you're trading, that's when I get a little bit closer in terms of my strike, because I really want that move to happen ASAP. And in that, my range or my margin of error in terms of where I'm going to stop out of that trade, it's really not all that far away. So although my strike is, or my contract's expiration is relatively close, I'm not you know i I'm not going to be risking all of that much, and that's why I tend to move more towards shorter dated contracts when I'm looking at, say, a hourly 15 5 minute time frame, something like that. Um so yeah, here, I mean, really, not the most bullish setup at the moment. If there were to be somewhat of a place to bounce, I think it would be somewhere in this vicinity. I don't really love these equal lows, but just one thing that's worth noting, we did take out this low with that price run. So currently, and on a shorter duration price run right here, you'll notice that you do have a bearish imbalance up here in discount, which, I mean, that's still a pretty sick move, 27 to 42. But to me, I just don't know. I don't feel all that great, especially with the equal lows. If this candle here took out that candle's low and then started to make the move that it did, I'd feel much more comfortable about, I'm not saying long this for the all-time highs, because it is a bearish market structure, but look for a discount retracement. We know it happens quite a bit. So yeah, that's currently AA. Not really like something that I'm all that into. PFE. All right, let's do PFE here. This one's been a slug. Whoops. PFE. All right. Pfizer. Beautiful, eh? Ugh. Okay, so with Pfizer, let's just take a look, zoom out just a little bit. Okay, so here's one thing that you will notice. Here's your low to your high. Whoops. Okay, there's your discount retracement. There's your run for highs. Beautiful. So let's flip it over a little bit. Here, okay, you're going to notice one little difference here. If we were to look like this, okay, we took out that high here with this price run. I'll zoom in to just show you. And this is where you might say, why didn't you put your your fib at this low for that run? And here's why. So we took out this high here with that price run. We got our discount retracement. There was our run for highs. Beautiful. So I'm not going to be using that low as a result, because my model is complete. So I'm going to move it up. Then from here, we took out that high with that price run. There's your discount retracement. There's your run for highs. So that's 2 times that my model has been completed. Here's our third. Ready? That low, 2. And we'll go to each red candle and just make sure there was no discount retracement. Nope, 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 nope. Let's see here. Nope. Okay. Nope. Here it is. Bingo. Okay. So there it is. Discount retracement. Beautiful. Run for highs. This is where it gets ugly. And Pfizer. Yikes. Okay. So here's where Pfizer currently sits. We swept that low. And at this point, we get that market structure shift, which would be bearish on a higher time frame. The difference here is that although we swept higher time frame liquidity, which would shift our market structure to bearish on the monthly time frame, we can look at it from this perspective as well. When you sweep liquidity, oftentimes that does create bounces, right? Look at Disney. Disney took out COVID lows, and look what it's done since. It's up quite a bit. So at this point, really, to me, this right there, we didn't quite get into that imbalance yet. Also right here, hold on, right there. Oh shoot, there it is. Okay, that's where we currently sit. This is our second attempt down into this area here. So this is an untouched imbalance down here, which not all that bad. But from that point, again, it goes back to the idea that we know price likes to retrace into discount. So let's mark out some of these discount bearish imbalance. And why do I call them discount up there? Where would be fair price for your puts? 50% of the range. So currently it's 43.74. Above that, you'd be getting it into a discount. And there's your discount imbalances, right? You have one more here. Gap down, showing you urgency 2. Move lower. There it is. Dump. Okay. So I'm personally not in the yeah, I'm not really in the business of trying to pick out the lows. Oftentimes I will look for in what I deem important, like for example, a COVID low, right, that we did sweep. But really it's not showing us anything to, kind of move it from that point. I think it did get one little bounce, and at that point it rejected that monthly volume imbalance right here, gap down, showing you urgency to move lower. So at this point, you know, I would prefer to like wait for it to create some sort of imbalance to the upside in order for me to feel good about us getting back into discount. I don't really like to try and pick tops and bottoms. Reason for that is I think it's much more difficult to do that than to just wait for an ounce of confirmation. And I know everybody always says confirmation. What does that mean? To me, that confirmation is just an imbalance to the upside. So, for example, wait for where's the first imbalance that forms here? Here it is, right? And it's that to me shows you, all right, we're gonna move higher, right? So until then, not really all of that much interest there, even since sweeping that COVID low. So yeah, there is Pfizer. I know a few people asked for that one. So all right, let's roll into Carvana. Whoa. Okay. So Carvana looks much prettier on the uh weekly chart, I'll tell you that. But let's zoom it out here. Hold the phone. Good. Okay. And let's just get all of current trading. So by us taking out this initial low here from 2017, to me, we have a bearish market structure. I think that's fair to say. So from your high down towards your low. Okay. Now we have a bearish structure. We have some bearish imbalances up here in discount. So I know they're very, very far away. And there's a lot of names like this currently that went ballistic after COVID and dumped off the face of the earth. So if we are to see what's it called? A discount retracement, it is quite far away at this point, right? So from here, let's just mark out some of these bullish imbalances down here as well. So there's your first. Whoops. Let's make that green. Let's do it again here. One more time. Beautiful. There it is. One more time here. Look at that. Just a tick. So look at this. This candle created the imbalance, and look what happened. Just a little tap in. Taps in, moves higher. So we are in a bearish structure, but currently in premium. So I don't really anticipate this bearish imbalance here to act as anything more than a speed bump or a little bit of a reset. And what I mean by that is, again, if you're buying puts down here, you're you're overpaying or like chasing in a sense, right? So again, at this point I'd be waiting for that discount imbalance. Does that mean that this next monthly candle creates an imbalance? I think that would be the most bullish thing. So for example, let's say our low of next month on Carvana is, I don't know, say like around there, right? Then the following month you can anticipate a retracement into it and then out, right? So that's just the way I look at something like Carvana. There's a lot of names with a huge, huge range, and we're just kind of getting off the lows. And again, Pfizer was missing this, but look what Carvana has: imbalance, imbalance, retracement, gone. So even if you're missing out on some money down here trying to nail the bottom, you're still going to nail a pretty sweet move following that. So that's why I like to wait for the imbalance to really occur in order for me to start trying to buy something that, knifed. When people say don't buy the falling knife, to me, it's nothing is really set, and I don't feel all that comfortable until I get some sort of imbalance. And at that point, you're not going to nail the bottom, but to me, that's okay. All right, let's see. What do we got here? Roku. Okay, let's look at Roku. Roku on the weekly, if I'm not mistaken, might not be as bad. But let's look here. Okay, so we took out that low here with this price run. Okay, so that's more of a short-term thing. But let's just look and see really quickly. Okay, so we'll go through each run here. So there's your low to high, there's your retracement, there's your high. Here's your next run, little turtle soup action, run for highs. Good. Move on over here. Low to, or whoops, hold on. Low, what was the high that, or run that took out this high right here? There, low to high, beautiful. So yeah, I would agree that we do currently have a bearish market structure. So with that being said, there it is. Whoops. Okay. Discount retracement, run for highs. So while I would agree that this is definitely our range at the moment, let's zoom in and see. This is just another one of those names where you have a massive range as a result of the COVID pumps. So here's your first bearish imbalance here. Here's your second. These are the only two that are currently in discount of the bearish range. Here's one more, aka like a little roadblock or something like that. So at this point here, let's see. We do have one bullish imbalance here, and you might say, whoa, price is way below there, man. What are you talking about? While I would agree, just the way that I go about my trades anyways, if I were to see an imbalance like this, my stop loss really wouldn't be set until the low of the candle that created that imbalance. So at the moment, to me, it's still hanging in. Also, if you were to try and look at something like this, where you took out, a low or a high here, there's your discount retracement, there's your run up, and then, oh, whoops. And then from that point, you can look and say to yourself, okay, this is our current range. There's your discount retracement. There's your run up. Here it is one more time. Oh, shoot. There it is. Boom. Okay. So dangerously approaching another bearish market structure shift. One thing that you might notice that this is literally the only imbalance that is formed off of those lows, right? Actually, I shouldn't say that. You do have one more right here. Small. And we've already held it once. So really it's a matter of protecting that 57.32. But yeah, not really the the best setup, to be honest. But you do have a huge range. That's the one caveat to this. 50% of your range right now is at 264. So it's pretty far away. Just you don't have to be bearish, bullish on this thing forever, but really any lower than this, then I think you're kind of playing with fire on a name like Roku, because where would the floor really be at that point? Your next or sell side first, it's 38. Following 38, you got 26, and then after that, you got your IPO or whatever it did, whether it was a SPAC or something like that. I don't know, but 15 would be that last downside. So, so that's Roku. You definitely not all that beautiful. But check this on the weekly. I believe that we're still holding by a thread. Yep. So as anticipated here, there is your bullish price run. There's your discount right there. We're holding on for dear life onto our retracement. Hello, 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 hello. All right. Just let me know you can hear me. Sorry, I got disconnected. I saw the spinning dots. Yeah, all right, cool. All right, good. Okay, so that's Roku's weekly holding on by a thread. This is, getting close to the deadly zone here. All right, so to continue, let's see what our next name is. Shop. All right, let's look at Shopify on the monthly time frame. Oh, and somebody remind me, Greg wants to look at Pepsi. So, I don't want to look at it on the weekly, but this is what I envision on the weekly, or I'm hoping to get on the weekly at least. All right, let's look here. Shopify. Okay, so if we're to take a look at Shopify here, we will notice that our range is pretty dang bullish. So there, no discount retracement. Good. There it is. There's your discount retracement. Here is your turtle soup. Okay. So here's our range. We turtle soup that low. Discount. Is there a bullish imbalance here? Indeed. There it is. Look at that. Perfect. You actually had one more small one above, which body respected. There it is. There's your run. Now you are approaching this massive bearish imbalance right here. But again, if we are in fact bullish on this, that really wouldn't look as you wouldn't look at that as a more than just a roadblock or something to slow you up. Maybe give you that discount retracement, but I don't think it's going to be a flusher in terms of a shift in paradigm here. So currently, let's see, we're not really working with all too much here. Let's just see, for example, no monthly imbalance there either. So on a name like this, look, you notice that we don't really have any imbalance up here, but we do have this. That is a bullish imbalance there. What was the price run that took out this high here from low to high? Beautiful. There's your discount retracement, 69. Check it out on the weekly, right down into this area here, which would be getting into your monthly imbalance. To me, that would be the most ideal situation there. And at that point, you might say, oh, well, like what's the draw on liquidity here? How would I identify that? And it's simply just going down in time frame. So I would then go to my weekly. Okay, so if we were to get this retracement, what would be our draw on liquidity? So our previous high was 91.57, and following that we have that 98.85, which is a swing high from a long time ago. But also, as we get into that is a bearish imbalance right there. So that's a forecast for shop. So I would really like to see it get a little bit lower before looking at it again. But again, like you might even say, oh, I think it's going to go down, so I'm going to short it. But at the same time, like, you actually do have a bearish level here. But for me to like short it, say like now, even then, it's like it just leaves me susceptible to more risk, meaning I would just prefer to use that imbalance as what my trade criteria would be. Enter off the imbalance, look for our low or our discount retracement in this case, and have my stop loss set above that imbalance. Simple as that. And if you're to look at like a monthly, if you're looking at and saying to yourself, oh, like I want to short this because there's a monthly imbalance or something like that, we didn't really get into one. The weekly has really been driving this. So if you look at where we rejected there, we also have it on the daily as well, actually. But you have we just recently swept multiple highs here. So here's your first, right here at 89.12, which is our first level of buy side. Our second was here, 93.15, not quite there yet. And then our third here at 98.85. So that is Shopify there. But that is one where I kind of had to go down a little bit in time to make sure. Okay, so let's go to Apple. Okay, ready? I'm actually curious to see this one on the monthly time frame. The weekly at this point, we are in a weekly breaker. I'll show you that in a second. But all right, so on Apple, ugly monthly, and we rejected. Oh, actually, you know what? Hold on, I should leave that there. I wanted to remove it, but I didn't. So while still holding this, just a little bit sloppy. And with that being said, if you're to notice, like, oh, why would we reject here? We did have that bearish volume imbalance right there on the monthly time frame. There it is, and there's your rejection. So at that point, we can look at it from the perspective: are we going to hang on? Because ultimately, we haven't really disconnected from this monthly imbalance here. But are we going to hang on to this and create, another move higher? Or from this point, do we retrace lower? And if we were to retrace lower, what was the price one that took out that high here? Low to high. Okay. No discount retracement. So to me, the range is not set. The range isn't set here. What do we have? Really, at that point, it's this. So, I mentioned earlier, a lot of these big tech names, they're, it's kind of a do or die type situation. One thing worth noting on Apple is you actually have a monthly bullish breaker as well. So you have your low, you have your high, you have your lower low, and then your breaker candle would be, I know it's big, that right there. And you'll notice so far so good, holding on to that monthly breaker. Not quite in discount of the specific range here, but it's there. You might say, where do we bounce here? You have this bullish imbalance here. So one thing that I like to stress a lot is that all moves can be justified, right? Everybody wants to look towards news. They want to look towards earnings. They want to look towards this, that. Every single move on here, whether you have a earnings report, whether you have data drop or anything like that, every move can be justified based on these types of ideas and concepts. If you were to, what's it called? Or even today, right? PCE, we ripped in the morning. We made a big retracement lower. So what happened at 8:30? They were all bullish, and then they said, "Oh, actually, I'm not bullish anymore. I'm gonna come off." Right, and they sold it down before running it back one more time. It just doesn't logically make sense to me that that would be why something would work like that, right? Somebody was talking about it yesterday, actually, and I know I've gone to this one already, but we'll go back to it again. You look at Mara and you say, "Oh, well, earnings were great. Like, what the heck's the deal?" Like, okay, can we justify this as to why we pulled back and had an ugly candle like we did? Sure. What happened? We completed my model here at 3130, triggering stops up here, generating liquidity. We also ran for this high right here at 3274. And with that, we're creating more liquidity. And at that point, you get that massive pullback, right? One of two things are going to happen. You're either going to get that explosive imbalance to the upside, which would generate that continuation type move, or you're going to sweep the high and you're going to pull back like we did. So not quite yet in discount. And I think somebody had a question about this before, where it's like, can one candle create a range in a discount retracement? Yeah. We're not quite there on Mara just yet. But 50% of our range would be at 2465 with our imbalance below it. Particularly you have this low that was already in the imbalance. You potentially could see some sort of turtle soup move where you sweep that low, generate liquidity for an upside move like that. That to me would be favorable. But going back to Apple here, important month ahead for sure. Also, you might notice it's very small, but that is also another bearish volume imbalance. So Apple really, it's kind of do or die time. And, honestly, it's not a name that I really trade ever. I think it's just not really a smooth trade ever. Maybe it's just my personal experience, but that's Apple. So let me roll through some more of these questions, and we'll keep going. Whoa, shoot! Hold on. I'm keep losing these. Yeah, I'm just seeing this thing flash, and it's like losing audio. But all right, let me just see if there's any questions. Then we'll get back to some of these names. Oh, I just saw that there, flicker. Let's see. Are there any more here? Okay. All right. Let's get back to these charts. I was just making sure nobody had any questions about anything. So let's see. UPS. Okay. Let's look at UPS. Okay. Now we're talking. All right. So price run to take out this high here was this low to, we can go to each high, right? And just make sure no discount retracements. Okay. And here we go. Boom. To me, the range is set once we get to 50%. All right. So from this point, we are in discount. We are in a bullish imbalance. This one, hold on. I'm just going to mark them out first. So here is fair value gap, bullish. And somebody said these don't work on stocks. I'm just like mind blown. How many times have we done these and they are just as perfect as can be? Just doesn't make sense. Somebody hasn't done their homework. But here is UPS down in our discount bullish imbalance. So far, not bad. So if I were to see something like this where it looks pretty good, at that point I say, okay, let's look at let's crunch it and let's see this thing check out on all time frames. And if it does that, fantastic. Okay. So we have our range. Okay. Beautiful. We got into discount. Great. We do have this bearish imbalance that we're working on the weekly. Hold on. I haven't charted this in a long time, clearly, but here it is. Okay. So we're currently in a bearish imbalance right there. So ultimately, let's see. I mean, I don't really love it off the weekly. And the reason I say that is because while we do have this bearish imbalance here, um, I could see us turtle souping, meaning go back down, sweep below one more time, and from that point, uh, drive price again. So, and let's just see. I think there's only one imbalance here in between right here. So you do have a bullish volume imbalance right there that we have not yet tagged, but let's look at the daily too. I think it's a similar story here. Yeah. Yeah. So we're currently working on this, which was earnings. Yep, makes sense. Earnings gap down. But on the daily, we have this bullish fair value gap here. Monthly looks all right. Weekly, daily doesn't look too bad either. Here's the thing, and this is why I like to trade the indices, and specifically something with futures, is because you're not going to get these massive gaps like this. So that, while you might get a gap on something like UPS, you're not going to get that on the indices. But this hold is beautiful right here. I'll tell you that right here. That's great. And that's pretty encouraging. This bounce here is awesome. That's another good one. So really, how can we limit like what our potential downside would be in a situation? And I'll be the first to tell you, there are times where you do something like this and you actually you miss some. It's a part of the game. But to me, I would always rather keep it as uh, precise as possible. That way, my losses will avoid being out of control. So not quite in discount of this most recent bullish price run. This imbalance here is in discount, and you also have this bullish fair value gap, wick, body, wick. There it is. So just not quite there yet into discount of the daily range. So that would be ideal for me. And then ultimately knowing that my trade it likely goes bad at 142.57. So that is UPS. We did Pfizer already. Yeah, we can look at Celsius. Honestly, it's not gonna. It's, to me, it's donezo. So I'll show you Celsius. It'll be a quick one that we review here. But okay, there's your price run that took out multiple sets of highs. Ready? 1, 2, 3. All those highs were taken out with what price run? This low to that high. Here's your discount retracement. There's your bullish order block on the weekly time frame. There's your run for highs. My model completes here at 68.95. Here's your continuation type move. At this point, honestly, no interest. The following next couple of weeks, I would like it to stay above 65.19, which seems pretty likely. But at that point, I would want price to retrace into the bullish imbalance that forms for a continuation move higher. And my fibs would look something like this. So there we go. The last stream of 2023. If you're bored and you want to just see the accuracy of this, where was it? Yeah, here. Just go back and listen to what I said about it. And that was at $50. So yeah, at this point right now, currently, we have this can go. That was mitigated. You also have this bullish fair value gap here in discount. You have a bullish fair value gap here. And so far, so good. So we'll have to see. When does the range set? That's the question. And instead of being able to look left and identify what our drawn liquidity is, we got nothing. We're at all-time highs. Makes it a little more difficult, but that's CLH. Okay, so WTI. Okay, let's do it on the monthly. CLH, it finished. So finished my model there. Okay, so what was the run that took out that high right here? And generously from low to, oh, we didn't quite take it out there. Okay, there it is. Boom. Okay, no discount retracement. Boom. Okay, so far so good. You do have your discount retracement. There is an imbalance down here. We actually have a few deep in discount. Not so sure those get tagged, but just worth looking at. There it is again. Okay, and here, one more. Whoops. There it is. Okay, good. So that's where we're currently sitting. Even this bounce here, again, ugly, still holds. No disconnect from that level whatsoever. And currently actually working on that speed bump right there. That's a bearish fair value gap on the weekly time frame. Above, you got one more. So ideally, if bulls were able to push it through here, I would anticipate, 97. And then at that point, ultimately completing at 126. But again, at what time frame is that? It could take a while. That's the I guess annoying part, right? So that is WTI. Let's keep it rolling here. SPY, okay, very similarly to NASDAQ, but SPY, we just finished my model. So if we are to go from our low to our high, there's your discount retracement. There's your run for highs. My model completed at 479.98. So from this point, you could say to yourself, what was the price run that took out that high here? Beautiful. So it's from here to, whoops, there currently. Okay. That doesn't necessarily mean this is the top. It doesn't. Okay. So what would be our drawn liquidity to the upside? We're at all-time highs. We got nothing. Okay. So who knows to the upside, right? But until we get some sort of market structure shift or imbalance on the weekly time frame, or a market structure shift on the daily time frame, I'm really not looking for lower prices. Maybe on like an hourly retracement or something like that, but otherwise not really. I don't see a real reason to do so. But there are multiple imbalances down here, and and when we do eventually get that retracement, everybody's going to think the world is ending and that we're crashing. But we know probably just a discount retracement of a bullish range. So that's where we're currently sitting in on SPY. I just saw one on Twitter, so I want to make sure we get to this one. This is Pepsi. Let's see. Oof, yeah, I'm not really a fan of Pepsi. Or I love Pepsi, the actual drink, but not the trade of it. So there's your discount retracement. There's your run for highs. Okay. There's your, no discount retracement. Worth noting. Okay. No discount retracement. There's a discount retracement. Okay. Whoops. Hold on. Let's get it right there. There's your wick. Gone. Okay. That wick probably scared everybody. Sheesh. What was that from? What was this wick? 2015. What the hell happened then? Okay, so let's see. No discount retracement. No discount retracement. There we go. Boom. There it is. 50%. Good. Bullish fair value gap right here. Bounce. Go. Good. So I'm doing this so you guys can see. Market likes to go to 50%. There it is. One more time. Gone. Okay. Turtle soup here. Low wick, sweeping those lows, getting back down into that bullish imbalance in an overarching bullish trend. Okay. And there you go. And then that's where we're currently sitting. Right. I don't believe that we retraced a discount here. No, we didn't. Nope. No discount retracement whatsoever. So a discount retracement on Pepsi would put, there's there's really only one level here, and it's right off 50% right there. So we did make an imbalance on the monthly. So to me, that would kind of give me the idea that price is likely to come down to discount at that point. And discount is at 149.15. So we'll see if that plays out. But that's just the way I would view something like that. Baba. All right, let's look at Baba. Garbage. I hate all of these names. Driving me nuts. All right, so let's come on over here technically still a bullish trend. I mean, did we sweep that low? Let's see. Yeah, we did. Yep, we did. Um, so by sweeping that low, technically market structure is bearish, but you'll notice we didn't create any bullish imbalance to the upside, which really throws a wrench into things. You have your, where is it here? Sell side liquidity is there at 57 now with, technically relative equal lows. Um, yeah, these just can't seem to get out of their own way here. And this was last month. We got up into that bearish monthly imbalance there and rejected. I mean, you got so many imbalances on this chart too. There's another. Where are we here? One more. There's just a lot to deal with, and I understand that with it's a huge range. I mean, if we were to look at it, what was the price run that took out that low here to shift that structure bearish, or really any of these lows? But to do so, you go from your high down to your low, and it's a pretty big range. And that's, I think, what's enticing to a lot of people. But to me, I just like to see it actually like create some sort of imbalance to show me that it wants to go higher. You know, and that's the tough part. So that is Baba. Let's see, TSM. Okay, let's go to TSM. I think TSM just finished. A few people in the group. Oh no, it didn't yet. Okay, so there's that's buy side liquidity. Okay, look at your current range. Whoops. There it is. Boom. Okay, low to high. Woo. Discount retracement. Run for highs. So TSM completes my model at 145 flat. So not half bad. Let me just see for reference here. All right, we're right around 50% of that wick. So yeah, does that mean that we retrace into this more immediate price run? So we took out that high here with this price run. Does that mean that we have to come back down into here first? Maybe, maybe not. Do we run straight for it? I don't know. Let's see. Let's see if we can find out any more information here. TSM's got a big range on the weekly. So low to high, discount would be 110. At this point, honestly, I would favor higher first for that reason alone. I think it's searching for liquidity in order to drive price back into discount of that most recent run. And currently, I guess I mean, you can justify it coming back down here, I should say. I think it's higher probability that it moves higher first, but that's just my take on it. So let's see, what else do we have? DKNG. Okay. Let's see. Whoa. Okay. So DraftKings, we never took out that low. Okay, so we really never took out that low down here. Right? Let's just confirm. What is that low? 977. Whoa, did we? No, 976. Ha. Nah, it didn't take it out. Okay, so technically still have that bullish trend barely, but you're working on your last imbalance right here on the monthly time frame. There it is. Oh, you actually filled it. Okay. So you filled up that last chance. I refer to these setups as like the best short of your life or the quickest stop out ever, because I think that really keeps it, clear in terms of, okay, if you get a monthly close above this level, likely going up to those highs at 74, but you could get that rejection off of your last hope or your final bearish for value gap here on the monthly time frame. To look for lower. I mean, really, you have a couple imbalances lower, but kind of a tweener. I would say that. Let's look on the weekly and just let's see. That's a nice hold so far. Check that. Yeah, that ain't bad. So really, you're on the weekly, actually, you have one more imbalance up here, 51 to 58. It's a pretty big range, but So yeah, I actually have this structured bearish. I guess it was from this initial market structure shift on a smaller time frame, that run right there. So again, look where we just like a lot of these other names that had that bearish structure. Look, price retrace up to discount of the range. It happens a lot. Um, so there is DraftKings. I'm gonna start motoring a little bit faster here because there's a ton of these right now. Sheesh. Okay. Again, if you're watching on YouTube, please like it, subscribe, drop a comment or something. If you're on Twitter, share it. You know, drop a comment, whatever. I think that's what you're supposed to say, right? All right, ALB. We'll start rolling through these now. A little bit faster. ALB. Whoa, great eye. Is that Koa? I think that is Koa. Yeah, that's nice. That's nice. That's real nice. I really wish it would have created that bullish order block right here, but discount of a bullish price swing. So far, so good. Got into this monthly bearish imbalance right here last month, or really the last 3 months. Uh, dang, it's a good eye. Yeah, Albertson. Sheesh. Let's look over here at the weekly real quick. Do it fast, I promise. Okay, this is great. Great, 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 great. Okay, so you have relative equal highs there. You have a low, high, lower low, over 150, 354. I know it might seem like it's so far away. That would actually create that bullish breaker on the weekly time frame, and then you could use that candle as your support moving forward. Yeah, this is a nice setup, man. I'm gonna have to alert myself to this one. So thank you, sir. I'm just putting it on. It's not, that level is nothing. It's just for me to be reminded of it if I forget about it. But yeah, good eye there, man. Real good. Root. Okay, let's look at Root. If it's a penny stock, I can't look at it. Oh, what? This had to have reverse split like 700 times, right? Yeah, definitely. I remember trading Root like 3 years ago. It was like $5. Okay, so this would be your range. That looks insane, right? You might say, "Oh my gosh, it's going crazy." The thing is, I don't know for certain, but if I had to guess, I'm uh, fairly confident that this at some point reverse split, unless something really bizarre happened. If anybody has any details on that, please share it. Um, Yeah, I'm thinking that it was a split name, and if that's the case, just like AMC, I'm out of that one. Um, let's see what else. TGTX. Somebody else just talked about that one. I think it was no, it was nobody. Nobody was talking about that. Not actually nobody, but nobody from the group. What the heck is going on here with all these wicks, man? Sheesh. Oh, all right. This has got to be another one that's split. Yeah. Yeah. I find it very hard to believe that TGTX was trading at 7,000, 100% a split name. Just, I really don't have interest in it when it does that, ever. So I'm sorry. I'm just not going to do this one for that reason. I mean, is it tradable? Sure. You have this monthly bearish volume imbalance right there, but does it mean that anything is going to change in terms of the efficacy of our concepts? And the answer is no. But in terms of identifying a range, it makes it so much harder when you're working with a $2,000 range. There's no way that thing is going to squeeze up to 50%, which would be like 1,000. There's just no way. But you do have relative equal highs at 35.94. I'll say that. But yeah, definitely not something that I'd be interested in for that reason alone. Let's see, Bitcoin, surely Bitcoin. I think this is the one I chart. I'm not sure. Hold on, I'll do it over here because I know this is my Bitcoin. Okay, so you'll notice we just made an imbalance up through previous bearish imbalance, right? Why would this not hold any weight really? Here's your speed bump. There's your run, because we have a bullish structure, right? If we have a bullish structure, we wouldn't really anticipate that causing or being much of anything other than a speed bump or just a pause. And there's your discount retracement. There's your run. Yeah, to me, all-time highs. I'm just curious to see, does it get there like immediately, or do we wait a month, create an imbalance, retrace into the imbalance, and then move higher from that point? I know there's a big catalyst coming for Bitcoin, which can be viewed in multiple different ways. So that's Bitcoin. Just sick move. Hi, Kale. Yep, we can do TWL. Oh, Twilio. Okay. So, all right. Let's just make sure we took out that high here with this price run on Twilio. No discount, no discount, discount. There it is. Run for highs. Great. Look at that perfect 2 standard deviation move. Maybe fibs work a little bit. I don't know. There's your next run. No discount retracement. There it is. And bearish market structure shift. Okay. So with that, what was the start of the price run that took out that low from there to there? Okay. Let's just mark out some of these discount imbalances. Okay, that's bearish right there. Oof, that was sloppy. Okay, there we go. Good. Yeah, really, that's pretty interesting. We're really working with one bearish imbalance here on the monthly. Let's just zoom in a little bit more. Where do we bounce? That's a bullish fair value gap. Okay, so that's decent. Now you're working on this. Interesting hold there last going into next month, huh? Yeah, that's a good spot. Not bad, right? So ultimately, I'd say the trade probably goes bad at like 49, whatever the low of this candle is, 49.86. But that's a nice hold, right? Let's come over here and we'll just look at it on the weekly real quick. Look at that. Ew. Okay. So you'll notice breaker didn't follow through. Why? Not in discount. I just wouldn't value it as much. But your breaker's melted. This imbalance is melted. Why? Not in discount. Okay. This imbalance, not in discount. This imbalance here, not in discount. This imbalance, okay, that's in discount. And here is what I mean by that. Here's your little price run right there. There's your retracement into discount. So far, so good. Although I think this is probably an earnings candle. It's just a matter of time. I think time would probably be the difficult part, but I think this looks good. You got relative equal highs up here, 78.16 and 79.70. So yeah, not bad. Not bad. All right, let's keep it rolling. We did Apple. Yeah, my stop loss is placed at the bottom of the candle or top of the candle that creates an imbalance. Simply put. All right. Oh, 2 A's. All right, NVIDIA for Sean. All right. Whoa. Okay, so low to high, discount retracement, turtle soup, ripper. Okay. The monthly range is going to be absurd here. I'm just letting you know. Okay. Price run that took out that high, this low to this high, and no discount retracement on the monthly time frame. So our range is still currently not set. Nothing over to the left. So, I don't know, flip a coin. In terms of where we go next. There is a volume imbalance here on the monthly time frame. Honestly, with something that's like at this point, where it's basically at all-time highs, but not quite, that's probably your last draw on liquidity. So for something like this, I would come over to an hourly time frame and just peak our range. And this one is just like AMD going into today. So I drew this out. This is what I wanted, and I didn't get it. We took off and took out buy side at 184.92, obviously. So I missed out on that one. But very similarly, is the range necessarily complete? no. Um, to be honest, I would favor 823.94. I think, Sean, you're looking long. So um, from the hourly perspective, you have relative equal highs up here as well at like 80. What is this? 802 ish, 803. Um, I personally would like everything to come into discount from me myself, but even on this most recent price run, if you're just to kind of loosely look at it, we go from first green candle that took out this high here, also bearish breaker or bullish breaker. I'm sorry, low, high, lower low. Here's your breaker. Whoops. Okay, price wicks into your breaker. So far so good. So that's just the way I would look at it if I don't have any like higher time frame stuff. Makes it more difficult, I think, but nonetheless decent. All right, SLV Silva. All right, so monthly on silver. Did we get in here? That makes it a little more tricky. It's a good bounce here. This is just like kind of glaring. It's really low though. I don't know if that's low, high, lower low. This is your shift in market structure or trend shift. This is a bullish breaker. Low, high, lower low, right there. Oh, interesting place for a bounce, eh? Yeah, just not really anything showing me either way how I would currently play it. I used to try and trade this. I think it's pretty bad to trade. You can kind of see it doesn't really do all of that much. I just feel like there's so many other names that are more popping. Like until tech starts to really slow down, I don't really look at anything else for the most part. So that's silver. All right, let's look at BA. Okay, and I'm gonna cut it here. So sorry, but I'm gonna, whatever names that we have on here, I'll do those, and then I'm gonna bounce. But all right, BA. Let's go. BA on the monthly. All right. So, on the monthly time frame, BA is actually bearish. So there's your whoops. Actually, hold up. Hold the phone. Hold the phone. Hold the phone. I just want to confirm that because I could be wrong here. Low to high, no discount retracement. No discount retracement. Uh-oh. Whoa, baby. I'm wrong. Hold on. See, looking left is important. Yeah, so turtle soup, retrace one more time. Here's a monthly imbalance that we bounced out of yet again. When was this? This was a while ago. But even if you're to look at the most immediate price run here on Boeing, that's a bullish imbalance there. What was the price run that took out this high right here? From this low to that high, you're right at discount. And you have relative equal highs above. You have this bearish fair value gap right there. Yep. Ooh, yeah. I kind of like Boeing. I actually have Boeing contracts, so just to be fair. But yeah, low, high, discount retracement. I mean, again, it's just another one of those situations like time. Like, how long is it going to take for us to get up here? But risk reward wise, to me, it makes much more sense. I'm playing for a 70% of the range win versus risking 30% of the range on a loss. So I like the odds on that personally. But Tesla, yep. Let's look at good old Tessie. Tesla's been like my favorite over the last couple of weeks. So let's see. Okay. There's still a few imbalances down here, but we bounce nicely here. This is a weekly level. You might say, how you can't justify this? What the heck? You can if you go to the weekly. I'll show you in a sec. But there's your weekly. This is also an imbalance that technically we never lost despite these ugly candles here. We never really disconnected from them. But our monthly last month, we actually created a monthly bearish imbalance. But here's the thing. What was the run that took out that high? Discount retracement into a bullish fair value gap and a bullish order block. I like Tesla. So, you know, obviously I'm biased, but that would be our rejection there, just for reference. So yeah, that's Tesla. A lot of room to finish the Model Pi. Snow, sure. Yeah, Snow, I'll show you on the weekly because that's what I looked at. But all right, so here's Snowflake. There's this. Okay, so I always just look at it this way, and on the weekly it's actually a little more clean here. But price run that took out these highs right here, beautiful. Discount retracement, almost into the discount monthly. Did we get into it yet? Not yet. Nope. We did not get into the monthly fair value gap, I believe. That's 180.80. What's the low of this candle? Oh, yeah, we did. Okay. So yeah. Here's the weekly. This is where it looks much better in my opinion. So we did sweep that low, turtle soup, bounce. Okay. We have one day to close back inside that bullish imbalance. If we don't, I don't really think it matters all that much. Ultimately, it's just a matter of time. How long is it going to take for us to complete my model at 237? That's the question. So that would be Snowflake. Walmart. Oh, BA did get news after hours? Huh. Walmart. Okay. Let's see. Walmart has a monthly bullish imbalance right here. Price got into it, and we'll see. I believe. Oh, the split happened on Walmart? Oh. But anyways, we're at all-time highs on Walmart, so I don't have any like target really to the upside. I just don't know. There's no area I can look as a part of liquidity. So the way I look at it up here is there's really no resistance. The difference is it's a matter of when those big boys who can actually move price, if they're able to, or whenever they do plan on slapping her down, that's when you'll get the down move. But really, until I see some sort of imbalance to the downside, I don't look for anything else. Just like on NASDAQ, just like on SPY. Microsoft, sure. Let's go. I'm rolling through these now. Okay, Microsoft. This is the weekly. Let's look at the monthly. Whoa, baby. That's strong. Okay, so you have another, I don't know what I put here. Oh, whoops. See, I just like mark out alerts. I like doing that. But anyways, here's your what was the run that took out that high here from that low to this high? Okay. Notice there's no discount retracement, still no discount retracement. So again, and we're also at all-time highs, so really don't have all that much information in terms of where it's likely that price will stop. We actually did get that breakout continuation move. So again, at that point, I just wait for some sort of imbalance to the downside. And when I get that, then I say, okay, I'm going to look for a retracement into discount. And by waiting for that imbalance to form, it also gives you an opportunity to make it tradable, right? You might not catch that first knife move, but on the retracement back, you can look to play it. So that's Microsoft. Let's see. Uber. Okay, yeah, we can look at Uber. Uber might be close to, yeah, no, it's already at all-time highs. Yeah, just another one. Unfortunately, I don't really have all that much for you in this situation, as there's no resistance. So there's this volume imbalance here. Yeah, Uber is looking nice. That's a breakout continuation. And you might say, like, how can we identify something like this? And it's really as simple as, do you make an imbalance through previous buy side liquidity? Because this is it. Okay. There's your imbalance through buy side. And then from here, who knows? Whoever's got the money to move price, when they come back and they decide enough is enough, that's the only time. We got no resistance up here, right? People talking about resistance at all-time highs. How? Price has never been up there before. It doesn't make sense. So what was the price run that took out that high? This is what it currently looks like. Again, do I know this is the high? No, I don't. Simply put, I don't. I don't know where it's going to be. But until I see some sort of imbalance to the downside, there's no reason for me to look at anything otherwise, really. Let's see. Yeah, Uber has been good. HD and lows. All right. We'll do these quick. HD. Oh, yeah. So HD ran into this monthly bearish fair value gap. Ultimately, we got a bullish trend, and buy side is at 420. So let's just look at this one more time. Let's just make sure no discount. There's your discount. There's your run. We got a bunch of imbalances here. So would be curious just to see how price reacts to that imbalance moving forward. Is it a roadblock? Is it something that needs a little reset? Because currently this is what we're looking at. The run that took out these highs here is that low to this high. Discount retracement would be around 331. Oh my gosh, the big range. For 40 or 420.60. It should be a 9. But yeah, is this going to be just a speed bump, or is it going to be a creator? So really, I doubt this happens, but this would be cool. Again, like 331 on the monthly on Home Depot. Lows. Okay. What the heck? I don't even know what the symbol is. LOW, I think. Yeah. Okay. Oh, very similar. Look at this. It's almost identical. There it is. Monthly bearish for value gap. Still a bullish trend. This range is actually much bigger. No discount. There it is. Boom. Discount retracement. Cha-ching. Runner. There's your bullish order block. And you also have this. That is a monthly bullish fair value gap. There's your bounce. And yep. So at this point, what's next? You can look at it from the immediate price run where it's, okay, we took out this high here with this price run. And let's just look real quick. Yep, no discount. Okay. So discount's really not until down here. Does it need to come here first, or does it go for those highs? That's the question. You have that bearish imbalance here. So to me, just not really as clear cut. I think there will be answers to be coming very shortly here. Ideal situation for, I would just prefer to take out the high 263 and then retrace down into discount from there. But that's just me. Okay, so Google. Okay, sorry, I almost missed Google there. If I'm not mistaken, Google looks like one of the worst tech names. But there's your sweep of all-time highs right here. Buy side sweep. Okay, this is just like Mara. Sweep the high, and then it doesn't look like there's going to be an imbalance forming. So let's just look through. No discount retracements whatsoever. You have a bullish imbalance here. And that's about it. Yeah, this is one of the worst tech names currently. So yeah, this is Google at the moment. And maybe here. That would be awesome. I don't know if that's going to happen, but that would be great. Let's keep it moving here. Let's see. Yeah, I did Baba already, Cad. I'm kind of just out on these Chinese tickers. I have Baidu, and that's so garbage. So, okay. So when it finishes your model, you're all out, holding nothing. Not necessarily no. So, what I like to do when I'm trading something like NASDAQ is, you'll notice in any of the videos that I do too, the live trades that I record, when we do hit my target, I kind of give it a little bit of breathing room. And what I mean by that is, if we were to sweep that high but create that imbalance higher, that's the situation where I let my runners run. If we don't create that imbalance, I just take it off. But I am very aggressive with my stop loss and profit at that point, because at that point, I just, I'm clearly up on it if I'm taking it in discount to that high. But I want to see, is it going to run for me? I'll give back a couple points just to see if I can get that additional breakout or continuation type move. IWM, sure. Let's look at IWM's monthly. This has been a laggard in comparison to SPY and Qs. Yeah, I really like IWM. I do. Price run that took out this high right here and simply low to high. Why am I not using this? This is, to me, this is a disrupted run. Could very well just do that as well. You're getting discount regardless, but we swept turtle soup low here. You have this bullish fair value gap. Also worth noting, what is this? Right here. Low, high, lower low, breaker. Look where price bounced. Doing. Beautiful. Look at that. So far, so good. Here's a bullish fair value gap here. So yeah, really, to me, the ideal situation. This is a monthly bearish order block, just worth noting. But I think if you were to beat that, you got green skies ahead. So that's IWM. Would you say SPY retraced at 500? I'm not really sure what that means. Yeah, I knew it, Frank. I knew that you were Koa. Let's see. Biotechs look like TGTX. It's the nature of the way they're funded. Welcome to XP. Yeah, I just don't. I'm out on them. Yeah, root split. I figured that. TGTX. Yeah, splitter. I cannot take credit for ALB. I can give thanks to whoever mentioned it in here. Can't remember. Yeah, no, it looks like a good one. Thanks to challenge. That's what I wanted you to look at. Yep, for sure. What about Tesla formed a bearish monthly fair value gap? I don't really care about that because the structure is still very bullish. So we went over Tesla. I'll just show you this one quickly. So while we do have this bearish fair value gap, I don't anticipate it being anything really. We got our discount retracement already. So so that's Tesla. Let's see what else. Oh, I cut it off. I'm not going to do any more of these. Hold on, I just want to make sure. I think I did all of the ones that I said before. Yeah. So, all right, 10 o'clock. All right, I'm donezo. Sorry. No, I cannot give you advice on anything. None of this is advice. It's just the way I look at it. It's for you to learn. It's not for me to. Oh, Kyle, you got the bullish breaker. Yeah, this is. I'm not saying anything. If you listen to anybody on the internet without learning how to do it yourself, you're nuts. It's just a learning thing. Nothing more, nothing less. So yeah, so I'm done here. I'll catch everybody tomorrow. Good luck, and we'll talk soon.